To customer anasemanga ako na supermarket, just visit it and ensure that it's able to generate such kinds of funds. And it for my cost. And the actual tax.
Good morning. Good morning, team.
Good morning to you, Frederick.
Thank you, John. Thank you for the response. I can see it is already 10 a.m. We were anticipating to have about 200 members. I'd propose that we start the session at exactly 10 past 10 to give more members time to join in. Then thereof we can start the session. Thank you.
That is in order, Frederick.
Yani
ukifinya unmute.
kwa sababu
Good morning, members.
Good morning to Frederick.
Thank you, John, for the response. Like we had earlier agreed, once it hits 10 past 10 a.m., we'll go ahead and kickstart the session. I'd like to welcome Team KEPSA to the session from wherever they're signing in from. Through the next course of the next 1 hour or two, we'll be able to go through a topic that was highly requested, that this was on eTIMS, particularly on validated eTIMS expenses and any other matter relating to eTIMS as well as iTax. From KRA, we shall have our lead representatives, Mr. David Busaule, in the company of Einstein Bulinda, who are from the Business Transformation Office, as well as Caroline Washuka, who's from the eTIMS office. Trust me, you're in safe hands. The team would be able to respond to all queries you'll be able to bring up. Just before I hand it over to Bwana Busaule to take it lead, I'd like to open the floor for Bwana John from KEPSA to give us some opening remarks. Thank you.
Good morning, members. First and foremost, I want to thank KRA for giving us this opportunity for this webinar. You know, this webinar is very vital. This emanates from the discussion in our technical KRA KEPSA Technical Joint Committee meeting that we did conduct on 4th February, whereby we did request them for them to conduct this webinar so that our members can be enlightened on what this eTIMS expense validation is. And I do believe that this webinar will be important for our members. I request our members to raise any queries that they have on regards to eTIMS expense validation. And I do believe it will be very crucial for our members. Thank you. And I also welcome our members from KEPSA. Thank you, Kerry. Back to you, Frederick.
Karibu sana, John. Maybe before we go on to the next item of the agenda, I'd like to request members to remain muted at all times. In the event that you do feel that you would like to speak up, feel free to raise your hand. There should be an emoji just below you at the bottom of your screen. In the instances whereby maybe you're not able to unmute or some would say you're introverted, feel free to utilize the chat box to raise any concern, and we'd be very happy to respond. At this point, I'd like to introduce the team, Bwana David Busaule. To take lead. Bwana David, please take it away.
Okay, thanks, Frederick. Am I audible?
Yes, you are, David.
Okay. And thanks the KRA team, my colleagues Einstein, Caroline, and other colleagues from eTIMS who are joining this, and members of KEPSA. Good morning, everyone. In my village, we still say Happy New Year until we get to Easter. So Happy New Year again if you've never interacted this year. I think you can enable me to share, Frederick, then we can maybe pick it up from there. Okay. Yeah, so I think, okay, good stuff. Thank you. Okay, maybe stop sharing a bit. I think I need just a minute. I close some unnecessary just a minute, close so that you don't have any disruptions. Just a minute. Okay. I think you're good to go. Close. Okay, I'll share. Sorry about that. So I'll share my screen. So we'll proceed with the validation quickly. So just allow us to put some perspective to what CARE is currently doing, and this is coming out from the public notice, which was issued last year around November, around 7th to 10th November, thereabouts. And the public notice was guiding the public on certain compliance requirements towards eTIMS validation, certain validations we are introducing in the income tax return. Of course, it guided on the data sets which we are relying on. It guided on the data sets which we are relying on going forward. So yeah, the public notice was there. Of course, it came with its fair share of concerns and queries, and we'll be glad to also just reinforce the messaging in this training, give clarification so that you know where care is coming from, where care is going, and how you can adapt your business to be able to comply with the new way of doing things. Because I think the legislative provisions are very clear. But in a nutshell, in summary, the public notice guides that from 1st January 2026, KRA will start validating your income and expenses in your income tax return for 2025. Again, very clear. KRA is only targeting the 2025 return, and it is validating both income, expenses, and imports. And of course, you are validating it against some of the data sets which KRA already has visibility of, not limited to TIMS or eTIMS invoices. We're also having your withholding income tax gross amounts. And of course, for imports, we are validating these from the import records from customs. So again, those are some of the data sets. We are still able to plug in more data sets to do more validations. And I believe you've been able to see what KRA is doing in the public space on enhanced use of and technology to just do this. So again, it's good we note that these are not the only data sets. As and when more data sets are within the have been received by KRA, analyzed, we will plug in more data sets, continue validating your income and expenses, again, just to ensure fairness, equity, and fair competition amongst all businesses, that everyone ends up paying their fair share of taxes. And the reason even behind we are using now the system validation is because, of course, we have a low level of personal income tax compliance. I think it's one of the lowest. The gap on the personal income tax compliance, I think, comprises of 0.0 something percent of our GDP, compared to probably it should be at a certain level. So it is at the lowest level. And I think it's upon all of us to ensure that everyone is paying their fair share of taxes. KRA does not require you to pay more by a cent. Neither do we also probably expect you to pay less than a cent. So again, it's a fair conversation we need to have. A bit radical, a bit. You might not be comfortable in this transition, but probably you need to find. We'll be working with you and ensuring that you need to know your ways going forward. So that's the public notice. And of course, something else, if you need a schedule of your income, expenses, and imports for that period you're doing your return, please reach out to your account manager. They will be able to provide you with a schedule of the expenses and income and imports. The reports are available in the backend. For now, we are working on enhancing the dashboard to ensure you have that visibility from the comfort of your office. But in the meantime, request for the schedule in case you need to do certain validations, even as you are doing your audited financial statements and other reconciliations going forward, so that again you're at a better compliance footing going forward. We, of course, expect to get more feedback. We've been getting more feedback from November. We've been incorporating that feedback to the best of our ability into the process, and I'll be speaking into some of the emerging issues we are currently working on. Again, it's part of the feedback process, and we hope in the next few months, all will be well. But also the messaging from KRA to KEPSA is let's not focus much on 2025. We are already on mid-February 2026. You needed to have already put in necessary adaptability and compliance measures to ensure you are complying even for 2026. So we can't have the same conversation come 2027 of the same gaps you had in 2026, which probably you needed to have changed the way. But again, we'll have these conversations as we go by. Okay. So quickly on the legal framework, the Finance Act 2023 is the major legal framework we are relying on in doing this validation of income and expenses. Okay. Sorry about that. So the Finance Act 2023 is the major legal framework we are relying on this validation of income and expenses. The Finance Act 2023 brought in made two major legislative amendments, one to the Income Tax Act, Section 16(1)(c) of the Income Tax Act, and another one on Section 23A of the Tax Procedures Act. So again, those two major legislative provisions are probably the major. Of course, the Income Tax Act has so many provisions, has so many schedules, but those two kind of became the game changer on enhancing compliance with eTIMS invoicing, rather eTIMS compliance, the aspect of electronic, rather not eTIMS, let's say electronic tax invoicing compliance and all that which comes with that. So again, we can make reference quickly. The Section 16(1)(c) of the Income Tax Act provides that a new section was added, 16(1)(c), which says any expenditure or loss where the invoices of the transactions are not generated from an electronic tax invoice management system, except where the transactions have been exempted in accordance with the Tax Procedures Act. So a very key section. In simple language, it basically just says the commissioner will not admit any expenses you claim in your income tax returns if they are not supported by an electronic tax invoice. Basically, that's the summary of it, unless there are exemptions as provided in the Tax Procedures Act. So from there, it's good. We move to the Tax Procedures Act and see what are these provisions the commissioner, or which exemptions the commissioner was talking about. Under Section 23A(4) of the Tax Procedures Act, it provides for those exemptions to electronic tax invoice. And it says the electronic tax invoice referred to in subsection 3 may exclude emoluments, imports, investment allowances, interest, airline passenger ticketing, payment of withholding tax, and similar payments. Again, very key to note, not all transactions must be supported by an electronic tax invoice. But again, the Commission has provided a list of exemptions. Maybe the question is the list conclusive? Again, that is part of the feedback KEPSA can take to the ongoing budget amendments, which are currently the Finance Bill 2026 amendments. You can look further to have more exemptions, probably which have not been provided. Then it makes the implementation of the law much easier going forward. So that is on the exemption side. Again, we may just need to bring you to speed on the Section 23A of the Tax Procedures Act. We'll not go into the actual wording of it, but just know this is a section which sets the pace for compliance with electronic tax invoicing. And compliance with electronic tax invoicing, the scope is wider. It is beyond VAT registered taxpayers. So I think that also needs to come out, that the Finance Act 2023 expanded the scope of electronic tax invoicing to include non-VAT registered taxpayers. So the aspect of having to issue an electronic tax invoice is not a privilege, or rather it's not a requirement for VAT registered taxpayers only. It is for everyone in business. And I think Section 23A(2) cannot put it better. It says a person who carries on business shall issue, of course, not may, shall issue an electronic tax invoice through the system established and maintain records of stocks in the system established. So those two provisions very critical, meaning it is not a VAT registered person, it's now a person in business, whether VAT registered or not VAT registered, should issue an electronic tax invoice, of course, with the exemptions provided below there. And of course, it goes to show you what a tax invoice is. So again, very important to note the minimum requirements of a tax invoice. What I may also bring to the attention of KEPSA members is one of the requirements of a tax invoice is the name, address, and PIN of the purchaser. So again, this provision goes without saying that if you are a business and you are incurring business expenses, it is your responsibility to ensure your seller captures your PIN in the invoice they issue through this system, which the Commission has rolled out for electronic tax invoicing, which currently is either TIMS or eTIMS. So when a supplier is issuing you an invoice through TIMS or eTIMS, it's for a business expense, you must provide your PIN to the supplier. The supplier must capture the PIN on the invoice and, of course, transmit it. So the capturing is not enough. There is also the transmission of the invoice to KRA, so that now when you come to file at the end of the year, the invoice is available for you to claim. So that is kind of how the journey goes. You go buy something from David. David invoices you. If it's for a business expense, you provide your PIN to David. Please note, it's not necessarily the responsibility of the seller to keep asking for the PIN. It is the responsibility of the buyer more to provide their PIN to the seller if they are dealing with a business expense. And the business expense could be both for VAT registered and non-VAT registered purposes. So once you provided your PIN to David, David's responsibility is now to capture your PIN and issue the correct invoice and transmit that invoice so that both you and David, you have visibility of that invoice through this common platform KRA has provided, which connects both the buyers and sellers. And now this expense or purchase will be available for you for claiming in the VAT return or claiming in the income tax return. So again, it's good. These are some of the things we really need to align our business processes going forward. And we cannot overemphasize, we need better collaboration and alignment between procurement or supply chain management, between the finance office teams and the tax teams and the accounting teams. All of them need to align and know going forward for certain transactions, the eTIMS invoice should be one of the basic requirements for processing a payment or booking the records of any expense in the books, in addition to the other supporting documentation. If you don't have that alignment and collaboration and partnership between these various teams, then you'll also continue having issues going forward. So again, that's just on the invoice. We'll be coming back maybe to this. KRA also came up with the tax procedures regulation, the tax procedures electronic tax invoicing regulations. We request every KEPSA member to acquaint themselves with these regulations so that again they are able to understand the expectations of the commissioner relating to these compliance with electronic tax invoice regulations. Okay. Again, we'll probably focus more on number 10, paragraph, is it paragraph 10 or regulation? Do they have paragraph? Okay. Paragraph 10 of the regulations, electronic tax invoicing exclusions. Again, it just supports the other section 23A4, and it explains them probably in a better language, which you can easily comprehend with. An average person can easily comprehend compared to probably the very limited language, which was then TPA. So again, the regulation should be read together with section 23A of the TPA format. So you've seen, again, what has been coming out from part of the feedback is there's been this question of KRA is rushing. And I think let's genuinely address this question because KRA has been communicating compliance with electronic invoicing almost 5 years. About 5 years ago, mostly on compliant tax invoicing. Okay, I'm being told my internet is unstable. Frederick, let me know if I'm still audible. I don't want to proceed when
You're audible.
Frederick? Okay, you let me know if I start you start hearing your own stuff on the other end. Okay. Okay. Aya. Now, it's good to have this conversation and let's have the candid conversation. You know, these are decisions which we really need to be candid and they are tough, they are radical, they kind of get you out of the comfort zone, but also it's good to understand where government and KRA coming on all these aspects. Electronic tax invoicing has been a best practice across different tax administrations across the world. Most of them have been doing this in the last 10 years. Last 10, 15 years, a lot of tax administrations have embraced electronic tax invoicing and invoice matching in one way or another. KRA, of course, started this journey way beyond even past 5 years. But I remember in the beginning of COVID, the commissioner communicated to all VAT registered taxpayers that they must onboard on the tax invoice management system. And of course, you needed to acquire different devices, whether it's type A, type B, type C, type D. That conversation continued. Lessons learned from the onboarding on the tax invoice management system gave rise to now the organization moving forward towards better solutions, which are more industry specific. They are much more simpler. They are less costly, or even they not cost the business anything. So KRA came up with eTIMS towards the end of 2023. But when KRA was coming up with eTIMS towards end of 2023, a legislative amendment had already been done in the Finance Act 2023 to open the scope of electronic tax invoicing to even non-eTIMS. So when you look at it, Kenya has been on this space for more than 5 years on electronic tax invoicing. Almost the same period most tax administrations have run with a similar initiative. And of course, the commissioner in the last 5 years has communicated. And I think if you at some point, you can go to our publications under News Center on our website, and you just go back to almost September 2023, you realize almost 5 or enforcing compliance around electronic tax invoice. So the commission has actually been very intentional in the last 3 to 5 years on communicating to the public the need to onboard and be compliant on electronic tax invoices. So the system validation is not a surprise. The commissioner has been tracking and ensuring and came to the point that I believe we've now reached a point where we can move to the system. And we don't implement system validation because we have a perfect scenario. No, 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 no. If we had a perfect scenario, you will never have to implement this system validation because we'll never have 100% transmission. We'll never have all our suppliers on teams or eTIMS, but it's now the mandate of the commissioner to start implementing some of these things, whose ripple effect will be bringing on board also those difficult suppliers who have refused to onboard on teams or eTIMS through other channels and through other visibility mechanisms. The commissioner will want to get that visibility from the compliant taxpayer. So again, it's a whole ecosystem where every person, the commissioner will use always ensure that they support the compliant taxpayers, but also through the compliant taxpayers, we get information from the suppliers you are dealing with who are not eTIMS registered. So again, that is just to ensure again just that it is a well thought out validation. We are not saying we'll not have challenges. This is a radical system validation whose year one will come with this better fair of challenges. And I can assure you, from the technology team I am in, I come from the business to technology and enterprise modernization. The team driving the technology and also probably the change management for now for this process. Yes, I can assure you we have a lot on our plate, but we anticipated it. It's not that it was a surprise. We knew we were coming from a point where the public probably was not very sure. They were not, maybe there was little clarity, or probably there was just something else. But now we are addressing it as we go by and helping you to comply going forward and also support you to file the 2025 return. So quickly to the filing process. You log in now. You log in as the taxpayer. Log in with a PIN. I don't know if let me just log in with a sample PIN just to show you how to download the return. Then we go back offline to the return. So you log in and put the password. Then you log in. File return. File return. Then you'll come and download the auto-populated return. So the filing process still similar. What we did in this first one of these IT validations, or rather this first major phase, we did want to change the filing process so differently, which will have affected the user journey, even as we are balancing the aspect of validations. So the filing process still pretty much what you did last year. You can download the blank Excel app here. The only thing you need to note is in December last year, KRA enhanced the iTax profile of taxpayers, and now you can download an auto-populated income tax company return or partnership return or income tax resident or non-resident. These validations will apply to anyone in business, whether you are an individual or a non-individual. So it's good also to note that the validations apply to anyone in business, whether an individual or a non-individual. Whether trading as a partnership or a company or trading with your own PIN as a sole proprietor, these validations will apply to anyone in business, anyone in consultancy. And this functionality is available to all those respective taxpayers where you can download the auto-populated income tax company return. So of course, this validation, this pre-filling of the return requires that you can, it was just an attempt, it was a simplification exercise by KRA, totally detached from the validation process, that we wanted to pre-fill your return with certain data sets KRA already has visibility of to enhance your user journey when you're filing the returns. So that is purely on the aspect of pre-filling. And also this pre-filling, now that probably allow me to mention this maybe for about 3 or 5 minutes, this pre-filling is also going to help all of you when you're filing your income tax resident returns for 2025, declaring your employment income, declaring your business income. All these things are also being pre-filled. KRA has now enhanced the pre-filling even of the employment income return, where we are now pre-filling your shift contributions. We are pre-filling your affordable housing levy deductions. We are pre-filling your pension. We are pre-filling your personal relief together with your gross income, your taxable income, and all that details from the pay return. We are currently pre-filling to make it better for you to be able to file those returns. And we are pre-filling both on the web-based return and the Excel return now. That becomes an additional advantage. Now, whether you're using offline Excel or you're using the web-based return, your user journey is completely the same. You'll have the pre-filled return for both on the employment income. What is not pre-filling, what we've not managed to pre-fill, I'll be capturing it at the end of my presentation. So we proceed. You download the pre-populated return. What I'll do for me, I'd already had a sample return. So I'll just come and show you the sample return. So it will download pre-filled already with your PIN if you download using the auto-populated return. Okay, it will download already with your PIN number, the type of return, the period, the business type. All those will already come pre-filled. The profit and loss, we are not pre-filling anything currently in the profit and loss account. So please note that we are not pre-filling your sales, neither are we pre-filling your expenses. What we are doing is, once you fill this return and you upload, we will validate your income and expenses against the data set we have within KRA. So again, it's good to balance. We don't wish to have a concern from a KEPSA member that KRA said they are pre-filling income and expenses. I've just downloaded mine and there is no income or expenses. Please note, we are not pre-filling income and expenses currently in the profit and loss account, but we will validate them when you upload the return. So please note that also. Good. So profit and loss not pre-filled. Balance sheet will be pre-filled with a lot of zeros, but of course you can always come and capture the necessary assets accordingly. Stock is not pre-filled. The investment alliances sheets of E1 and E2 are not pre-filled because again, we don't have visibility of some of these assets you have. Maybe in a future period when KRA, and I believe most of the KEPSA members are aware, KRA is in the market we are back in the market to acquire, revamp our technology infrastructure, and we'll be replacing iTax and many other systems within KRA in the next probably 2 years or so. Already we are at the RFP stage where bidders have already submitted their bids. They have requested certain clarification. So that process is already ongoing. And of course, we'll now go and get a vendor to provide different systems across KRA, including replacement of iTax. Of course, when you're at that point and maybe we have to integrate with your ERP, yeah, we can be able to pre-fill some of these things like assets and other things. But of course, that's a futuristic conversation. But of course, it's just good to note that it is possible to actually pre-fill some of these things if you have the correct integration with your respective ERP systems. Now, we come to the installment taxes. If you had paid some installment taxes in the year, whether you actually paid or you set off some of them against your installment adjustment vouchers, all of them again will be pre-filled under sheet F. This is for the income tax company, but again, they will still be pre-filled in the respective sheets, whether it's the income tax resident or non-resident return. So again, that one, please note the payments. So basically all payments and all credits deducted or paid in advance for that period, for that tax period, will always be pre-filled in the respective tax returns. We come to this other payment credit sheet. In case you are filing and you've already done a balance of tax, I'm assuming, let's say you're a December year end and you're filing this return in June, but you had to pay some balance of tax by end of April. When you're downloading this return in June, it will also come already pre-filled with the balance of tax. So again, just to make your user journey and filing easier. The previous year's losses, for now, they are not being pre-filled, but we are looking towards pre-filling these towards probably by April. We should have probably found a way of pre-filling your previous year's losses, because we are moving towards a higher level of pre-filling to the best of our ability with all data sets, credits, deductions, and reliefs and exemptions available to us. We want to pre-fill all that to just make your filing experience much better. Again, for the share of partnership income, we are looking towards pre-filling this by end of March, where we'll be, once the partnership files the return, we'll be pre-filling that share of profit from the partnership directly to the respective partner, whether it is a company or an individual, whether it's an unlimited or limited partnership. Again, we are looking towards that going forward. The tax computation. For the tax computation, you realize what we'll be pre-filling is mostly the installment taxes. That one has been picked from the respective sheet. We will pre-fill your withholding tax credits. We will pre-fill your advanced tax credits. We will pre-fill any withholding tax if you're a landlord and some of your tenants are appointed tenant withholding agents and they have paid you some rental income and they have withheld the rental income, especially for commercial purposes. We will pre-fill also such details where applicable. So that's the level of pre-filling. Good. Allow me to move now to the actual validation. Now let's come to the profit and loss account. Now, of course, what is the process now? You might have gone through an audit. You've been issued with audited financial statements. Of course, you now come to capture the income. You can have more than one source of income. You can even have rental. You can have interest. Maybe you have you've invested in some T-bills, T-bonds, some fixed deposit account with one of the financial institutions, and they are paying you interest. So you can have all those sources of income. You can have business, you can have farming, you can have interest. So that's possible. Maybe let me make business maybe some huge amount. Okay. So that is it for this enterprise. So that's how you declare your income. So again, you realize the user journey around declaring the income does not change. It's the same return, it's the same Excel, it's the same fields you declare the income. Now, these are the new validations and how they are going to apply. Please note the validations we are doing are not on the Excel template. We are doing the validations when you upload the return. So when you capture such details like your gross turnover is a billion, farming income is 1 million, interest is 1 million, what will happen for now in this first one of the validations, we are going to add all this income together and validate it against certain data sets KRA already has. So what are the data sets we are going to use when you are validating your turnover or income? We are going to validate it against your eTIMS or TIMS invoices, or the gross amounts of your withholding certificates for the period. So we are picking the higher of the two, meaning if your TIMS or eTIMS sales are higher than your gross amounts as per the withholding, we're going to use the higher of the two to validate against the income you have declared in the return. So please note those are the validations for sales for now, but notwithstanding, we might still plug in more data sets as and when our analytic tools are able to pick them from the different data sources, both within and outside KRA. We'll be able to use that data in validating your income, even going forward. But for now, those are the main data sets we are validating. Your gross income amounts as per the withholding certificates, and your TIMS or eTIMS sales, we pick the high of the two, and we validate against the income you have declared in the return. So what is the system? What is the validation the system is looking at? The system, the commissioner is looking at ensuring that you declare at least, you cannot declare the income which is less than what the commissioner has visibility of, either coming from TIMS or eTIMS sales invoices or the gross amounts as per the withholding certificates. So again, those are the, so I'll take you through the happy path. I'll not go into the emerging issues for now. So I'm taking you through the happy validation process. Then after my presentation, I'll take you through the emerging issues. Then now you'll be able to match in the two and know how KRA is aligning both issues. But it's just good you understand the basic validations first without a lot of accruals, prepayments. Let's not crowd our happy validation, happy path, our validation happy path with other emerging issues like prepayments. We'll come back to them. So if you have a question or concern on that, please wait. I'll address it after I'm done with the happy validation, the income tax validation happy path, which does not take, which that is not affected by prepayments, accruals, and any other accounting adjustments. So again, we say the validation, the commissioner picks your total turnover, validates against the higher of your gross income tax certificates, gross turnover, or your TIMS or eTIMS sales. Of course, for the TIMS or eTIMS sales, we've already accounted for the credit notes for the period. So again, it's good to note that. Now, when the system realizes that the turnover as per the return is less than the data sets the commissioner has, whether relating to the withholding certificates or the TIMS or eTIMS net sales, the system will reject the upload of the return and communicate the correct messaging. Maybe when you're uploading, you'll get a message like this: the total turnover from eTIMS or TIMS invoices of this amount is higher than the gross turnover you've declared in the return. You'll be guided to declare the correct turnover and proceed with filing. And of course, so again, that is basically what the messaging you might get when you declare less income than what the commissioner has visibility of on a very high level. Of course, we are looking at in subsequent periods to come, hopefully when you're filing the 2026 return in 2027, we'll be validating your business. We'll try as much as possible to enhance the validation to the specified source of income. So we might add a layer of validation to validate against specified sources of income, especially for those who are in eTIMS, because eTIMS allows you to issue invoices against certain item codes, and using those item codes, we can easily come back and know, was it rental, was it farming, was it business, was it interest? Of course, interest is an exclusion, but we can be able to know the main business transaction behind it, and to the best of our ability, be able to classify some of these specified sources of income, so that again, we don't just validate on the global turnover, we validate on the specified. So those are some of the thought processes we have probably for the next filing season, not this one, the one in 2027. Okay. We now come to the expenses. So let me separate the expenses into two. We have the expenses which are exempt from electronic tax invoicing. So let's start with those ones. So we have expenses which a business will claim, and they are exempt from electronic tax invoicing. So what are those expenses? Allow me to take you a step back, and we go back to paragraph 10 of the tax procedures electronic tax invoicing requirements. We have emoluments. We have imports. Imports includes both imports of goods and imports of services. We have investment allowances, including internal accounting adjustments relating to investment allowances. We have airline passenger ticketing. We have interest. We have fees charged by financial institutions. We have expenses subject to withholding tax, that is a final tax. We have services provided by a non-resident person without a permanent establishment in Kenya, and any other exclusion. So again, very clear on the transactions where issuance of an electronic tax invoice, and also when you are claiming them, you may not need to support them with an electronic tax invoice. These transactions are basically there. So again, quickly on that. So you realize they're there. So allow me to show you how the returns have been taken care of. Oh, sorry. Okay, what is that? So allow me to show you how the returns have taken care of that. And these are all our returns. So I can start with even with the individual resident return. I can go to the profit and loss account. You realize the profit and loss account of all our returns are standard, whether it's for the individual return, whether it's for the partnership return, whether it's for the income tax company return. Unless there is something unique to a certain obligation, basically the better part of the profit and loss account is standard. So even as we are using the income tax company return as a test case, please note all these changes are cutting across. So we come back. Let's start with imports. How has the commissioner provided for imports in the new way of filing going forward? Initially, we used to have a field called imports, but the commissioner has now separated the imports into two: imported goods, imported services. Up here, section 2.2.2, imported goods, 2.2.3, imported services. Again, that is how the commissioner has met that provision of exemption in the TPA and the regulations by now separating the two and making it very clear. Why did the commissioner separate the two? Because for imported goods, the commissioner is validating them against data from the customs business systems. So yes, we are not validating them against TIMS or eTIMS invoices, but we are validating them against data from customs business system. Imported services, that one has a very wide scope, including even those services purchased from a non-resident person without a permanent establishment. That field can be used for capturing those services, including our subscriptions to Netflix, if it's for a business purpose, our purchase of software, Microsoft, and all those things. Our advertising fees we pay to Meta for advertising on Facebook, on Insta, all those things. Some of the services we purchase from Amazon, and all those are basically importing engineering services from China and India. Maybe when you are setting up a certain project in Kenya, again, all those things. You can always claim those imported services as long as they are of a revenue nature. So that is how imports have been done. Let's go to the next one. There was something to do with airline ticketing. Airline ticketing has been provided under operating expenses. We now have a unique field under 5.2, which was not there, called airline passenger ticketing. So again, Why are we showing KEPSA members the specific fields where you must claim the exemption? It's because the commissioner has configured this return in a way that you can only claim the exemptions in the fields the commissioner has provided for you. So again, what is changing in the filing going forward? You can no longer claim the exemptions outside the fields which the commissioner has provided for the respective exemptions. So again, it's good to note that for imported goods and services, you can only use these two fields. For airline passenger ticketing, you can only use this field. When it comes to things to do with the emoluments, emoluments has been provided under employment expenses. You can only use these fields under employment expenses. Financial expenses relating to interest expense and fees charged by financial institutions and their respective fees of commitment fees and insurance, you can only use those first four fields of Section 7 of the profit and loss account to claim those interest expense and fees charged by, because that's where the exemptions, that's where the system will provide you with the exemption and not validate these expenses against your TIMS or eTIMS purchases which have been issued with your PIN and transmitted with your PIN. Okay, it's good to have that clarity between the exemptions and the transactions or expenses which will be subjected to your eTIMS or TIMS purchases. So we are done with the exemptions. The other ones, we've already provided them in a different way. Investment allowance, we have a specific field under E1, sheet E1 and E2. That is where you capture your investment allowances across the different scenarios. So again, those ones have been provided. So to a good extent, Commissioner has mapped all the exemptions on a one-to-one basis and allowed you to capture them at some point. So let's start claiming some of our things. Let's assume maybe this person has some imported goods of 100 million. Maybe he has purchased some imported services in its wider, including services from non-resident persons with no permanent establishment, probably over 100,000. And it can be in any, you can even be under farming. It doesn't necessarily need to be under business. So you can even have one under farming, one under business. Then, of course, now we come to, you can come and claim other expenses, maybe relating to advertisement. Maybe you are really trying to step up your farming business. So maybe you've incurred that under advertisement. I'm just using as an example. Airline passenger ticketing, your staff, maybe they are traveling both locally and internally, sorry about that, both locally and internally relating to, and they're using airline. Please note, this is not SGR, this is not Uber, this is not taxi hailing, the taxi fare, matatu. The act is very clear on airline passenger ticketing. Okay, maybe those are the tickets you incurred in the year. So I'm just using normal expenses, maybe freight and transport to move your goods around. You incurred that one. Okay, that's a lot. Okay, let me try okay. Maybe training of your staff. You get guys to come train. You get guys to come train. Again, you can have that training expenditure relating to your staff. Okay, around that. Again, now you come to salaries and wages. Under salaries and wages, you have your emoluments. So emoluments, please note the TPA and the regulations speak to emoluments, and please note it is at that very global definition of what emoluments are. So all those things provided under Section 5 of the Income Tax Act are always considered as emoluments at that high level, and that is the section you need to claim your salaries and wages and other things relating to leave benefit. Any other employment cost might capture things to do with per diem and other things, of course, if it's a cost to the employer. So yes, you claim all those things under employment expenses, DSA, per diem, whichever. Leave bonus, maybe you're paying bonus to your staff. again, you can claim it there accordingly. So that's on emoluments. Again, what is the commissioner saying? That any expense relating to emoluments must be claimed under section 6.5. If you attempt to claim it under any other expense, it is going to be validated against TIMS or eTIMS. We come to interest expense. Probably the organization, the farming business took a loan where they are funding a loan, they are paying an interest expense of that. Maybe the company account is having so many fees charged, ledger fees, monthly charges, check clearing fees, all those things. Maybe they come to this amount. You claim them under fees charged by financial institutions. So this is just like an example. Then now, of course, the profit and loss is now well constituted. You're now ready to file. So you let me address the aspect of other expenses and other income. So when you come and capture any other income under this section of other income, it will still be validated against the validations for TIMS or eTIMS or the gross amount as per the withholding. If you have something for other expenses, it will also still be validated against TIMS or eTIMS purchases. So please do not come and claim your exemptions or exclusions under the other expenses section. As we say, the exclusions or exemptions from electronic tax invoicing, those transactions, should only be claimed against the specific fields the commissioner has provided. Using this field of other expenses, we are going to add it to all other expenses and validate it against your TIMS or eTIMS purchases. Okay, now let's come to the validations. When you upload this return, what will happen? The system is the return, when it is adding up the validations, rather the expenses, it will exclude any expense relating to the exemptions, imported goods, imported services. It will exclude airline passenger ticketing. It will exclude things to do with employment expenses. It will also exclude things to do with interest fees charged by financial institutions, commitment fees, and insurance fees relating to those financial expenses. It will exclude all of them from your tally of your expenses. And now the balance of the expenses is the one which is going to be validated against your eTIMS purchases, which have been issued with your PIN as the PIN of the buyer and transmitted to KRA with the PIN of the buyer. So those purchases will already be in a pool waiting to be validated against the expenses or purchases you are capturing in the return. So please note that is now how the validation is going to happen. And in case the system realizes there's a discrepancy between your expenses or purchases after it has already accounted for the exemptions or exclusions, and it realizes your expenses are still higher than what was issued and transmitted with your PIN, the PIN of the buyer or the purchaser, then of course you're going to get an error message like this one. Let me maybe make it bigger for the people maybe joining with their phone. They can be able to see. So you'll get this second message, the third one, your total purchases or expenses as per the eTIMS invoices of this amount, excluding the exemptions, is higher than what is less than what, for expenses now it is less than what has been claimed in the return. Please claim the correct amount. So there are two rules which are coming out clearly. The system will not allow you to declare less turnover than what the commissioner has visibility of unless you're going to use the new sheets which I'm going to cover under the emerging issues. Neither will the system allow you to claim more expenses than what the commissioner has visibility of. And also for imported goods, in case you are claiming more imported goods than what is available from the customs business system, the system is also going to let you know that the commissioner only has this visibility of your import for the period against what you are claiming. And of course, now you need to do reconciliations around that. So that's kind of how the validations are happening. So you can always capture more sales than what the commissioner has visibility of. That is totally allowed. What the commissioner might require further reconciliation is when you are attempting to capture less sales than what the commissioner has. So more sales than what the commissioner has visibility of. If it is the correct sales, highly encouraged. Capture the correct sales higher than what the commissioner has. The return will not the return will never give you an error message that you are declaring more sales than what the commissioner has. What the return will bring to your attention is when you are declaring less sales than what the commissioner has. Now, for purchases, the same rule. The return will never query or the system will never give you an error message guiding you that you are declaring less expenses or imports than what the commissioner has visibility of. Why? Because section 15 and 16 is very clear. Not all imports, not all expenses will have been incurred in generating taxable income. So you have a leeway to claim less. What the commissioner may be more concerned about is you claiming more unless she is convinced through a further reconciliation process that you need to claim more than what already she has a visibility of. So it's okay to claim less expenses than what the commissioner has. It is okay to declare more income than what the commissioner has. So those are the validations. We can now move with speed because I also need to bring my eTIMS person for about 10-15 minutes to just pick on some emerging issues on eTIMS. Then we do a joint Q&A. But I just want to try be as thorough and elaborate as possible, and probably just even maybe answer to some of your concerns or worries or questions even probably before, because we've been doing this now for a while. We kind of know some of the common issues which keep on being raised, and we'll still be able to address any unique issues raised by KEPSA which I may not have captured in my presentation. So those are the validations of the profit and loss account. Let's come to the balance sheet. You capture your details, maybe your assets. I'm just using a very simple provision. Good. We come to stock analysis for the manufacturing guys. You can capture stock. Then you come to the investment allowance, sheet 1, E1, where applicable, please capture them accordingly. Trying to move these. So where applicable, please capture them accordingly. Okay. E2, this is where now you capture most of your normal business depreciation aspect of wear and tear, your computers, your vehicles. You come and capture them there. Maybe you had some additions, maybe even you didn't have access, but this year you bought, or you could also be having some, of course, all these are now being on straight line. You could also be having some balance of some assets under each category, and you capture. But please note, we also you realize the rates are not visible, class A and class B, and also by this is an issue for pre-filled returns. But how do you go about it? Just go back to the return period and you just recapture the return period, and it should be able to update and trigger the macros accordingly. But it is something we are working on. It shouldn't be a cause of concern much. Just capture the return period, go back to E2, then you realize we now have a validation, and we also have the wear and tear now calculated at both 25 and 10%. So again, of course, we have a summary of the capital allowances. Installments are already captured, they're already pre-filled. So let me go to the tax computation. Then in the tax computation, you can still come and allow certain exempts. You can come and add some certain disallowable expenses where applicable. You can also come and bring in some other allowable deductions. For the allowable deductions, please note the return will do checks between this tax computation sheet and all the other previous sheets. So the return will not allow adding new allowable deductions which have not come through any of the previous sheets. So again, those are some of the checks which were just put to ensure that we are still able to track the correct taxable income, which is the difference between gross income and allowable deductions and expenses in there. So yes, you can use some of these sheets again to capture any, introduce any disallowable deduction, that's fine. But for the allowable deductions, we are just ensuring that no new allowable deductions can be introduced in this sheet which have not been introduced in any of the previous sheets. Again, to just put a check and ensure that we are validating all these against your eTIMS and TIMS purchases where applicable if they are not exclusions or exemptions. Then your P&L now continues loading well. The Finance Act 2025 provision, Section 12.2 is as a result of the Finance Act 2025 provision, where dividends distributed out of untaxed profits will now be taxed at the prevailing corporation tax rate. So again, that one, where applicable to you, you can use it. Then, of course, you now come and validate your return and upload it. So again, that's just how the process goes. So once you upload the return, that is basically when you'll see the system validations are relating to your income, your expenses, and your imports are where applicable as per the return you've just filed. And I think I'd already shown you some of these sample error messages you can get. So these error messages, these validations will apply whether you are filing a nil return or you are filing a proper return with values. Or at upload, the validations apply across board, whether you are filing a nil return or you are filing a return with different values. I know you are all aware that KRA has postponed the filing of nil returns using the file nil return option up to after 31st March 2026. KRA already communicated this. This is part of our first filing approach strategies for this year, where we want to bring in the nil filers after 31st March, after we've done a lot of analytics and just ensuring pre-filling and other things have happened before. But for those of you who are employed income, you're having invoices and other things, you can go and file your return. You don't need to wait for 1st April, but the nil return filers need to file from 1st April 2025. Any attempt to file a nil return now, you'll get a proper message that it can only be filed after 31st March 2026. So again, it's good to note that. And the genuine nil filers, when they come on 1st April, they should be able to file. Our students, those who were unemployed completely and they didn't have any taxable income, will be allowed to file returns after 31st March 2026. Sawa. Okay. Now let me take you to some of the emerging ongoing enhancements quickly. Then I bring in my colleague from eTIMS. These are some of the ongoing enhancements we are currently working on, and I'll speak into the emerging issues. So we've been having emerging issues. Some of the emerging issues we've received from part of the stakeholder feedback when we started this change management initiative was we have accounting adjustments, provisions, accrual accounting concepts, aspects to do with deferred income, prepayments, work in progress, all that. That was a genuine concern, which has been coming from November 2025. We also have, because this is the first year of rollout of this radical system validation process, we still have some of your suppliers who probably the better part of 2025, they not onboarded on TIMS or eTIMS or even the whole of 2025. Again, that's a concern which I'll be speaking to them. Also, we have some aspects of those taxpayers who are non-VAT registered. Of course, for them, the VAT component of the invoice is a cost to their business and they need to be allowed to claim. We've had concerns about better access to visibility of the invoices and the schedules which KRA is relying to validate your income, your expenses, and your imports. Of course, for now, as we had already guided before in this sensitization, you reach out to your account manager, they're able to provide you with an annual schedule of all those income, expenses, and imports for you to aid in reconciliation of your respective transactions. But also what we are working on is enhancing the taxpayer dashboard, which when you log into iTax, I'm not sure if my login details in iTax are still there. When you log into iTax, this dashboard, this is what we are talking about. We are enhancing this dashboard to give you a visibility for a longer period. For now, it is giving you visibility for the current month's transactions. We'll be giving you visibility for previous transactions, and also it will allow you to query a longer period, like a period probably similar to your return period you're filing for 2025. So again, it's good to note that that is an enhancement enhancement we are currently working on, but your account managers can provide any reconciliation to anyone who needs those schedule. For now, they have been guided, they have been trained, they have been given the reports, and they can use those reports to support you where possible. Also, some of the enhancements we are working on, some not related to this, but we are working on enhancing the employment income for income tax return and non-resident to be pre-filled with mortgage and insurance relief. So those two are the currently are the only two fields which are not being pre-filled in the ITR and in the ITNR for employment income only. And even if you are both employed and you're having a side hustle, your employment income details will be pre-filled, even as we allow you to come and capture your side hustle income and expenses. So those two, the mortgage deductions and the insurance reliefs, that is in progress. We hope by end of March 2026, we'll have, basically we are working with end of March 2026 to have provided all these phase, I can call them probably phase 2 or phase 3 of the income tax validation, purely coming from feedback from the stakeholder engagements, which have been very fruitful, and we thank everyone who has given their feedback. Pre-filling of losses, again, that one also we are hoping to have it pre-filled by end of March 2026, where when you download the auto-populated return, we are going to provide you with the losses will be pre-filled for the respective years as provided by the law, and you'll be able to, because we've also realized there is a gap on how some taxpayers understand how the losses validation happens. So we want to make it easier for you going forward. Now to the first two issues, I think those are the main issues which probably might require further explanation. So of course we have some suppliers, even some government entities currently who are still not fully compliant with TIMS or eTIMS. And also we also have those accounting transactions, provisions, just aligning accrual accounting, aligning your accounting profit to the taxable profit. We might have some accrual concepts and of course other accounting adjustments relating to different things. So we are going, how are we going to address these two major emerging issues, which I think they top the list of the emerging issues. We are going to provide you with 2 new sheets in the return. So 2 new sheets are going to be provided in the return. One will handle accounting adjustments, provisions, accrual concepts, not limited to deferred income, prepayments, work in progress. We are already in the process of coming up with the fields. If you want to suggest some fields relating to these, again, these are good mechanisms. These are good forums for you to provide feedback. The KEPSA Secretariat can liaise with our stakeholder team. You can provide the fields you believe should be provided, and we are gonna consider them in the system enhancements to the best of our ability. Now that's the first bit. We're also going to provide a new sheet which is going to allow you to claim valid business expenses which, due to some reasons beyond your control, were not probably supported by a valid tax invoice. But we really request KEPSA members that please don't take it as business as usual. This is a transition provision, the commissioner extending an olive branch to ensure we have a better transition to the validation, but it should never be treated as business as usual. So again, we are going to come up with a new sheet, will allow you to declare certain certain business expenses which were not supported by a valid eTIMS invoice, TIMS or eTIMS invoice. Of course, we'll give you certain fields you must provide. The commissioner is going to use this sheet also to reach out to the respective suppliers you are alleging that they dealt with you and they never gave you a valid TIMS invoice, for the commissioner even to take corrective action also on those suppliers. So it's a win-win. On one side, in the transition, you are being allowed to claim some business expenses which you could not support with a valid manual eTIMS, but there must be some other supporting documentation. There must be some bank statement. There must be some delivery note. There must be some manual invoice. There must be some pay bill, till number, where you paid, some M-Pesa message, or rather some mobile money message, depending on whether using M-Pesa, Airtel, Equitel, or any other, or T-Cash for Telcom. So again, all those messages should be there to support that. So those 2 new sheets are going to really manage the transition, but also please note what the commissioner will require from you. Anyone using these 2 new sheets will be required to upload supporting documentation in addition to the return you're filing. So that's just the new ask. Yes, it's a leeway, it's a transition sheets we are going to provide, but will require you to upload supporting documentation to support these two new sheets. Yeah, yeah. So again, that is just so when you are going to file your return, you will upload the return, but also you'll be required to upload a schedule of or copies of invoices. Not probably every, but maybe sample, depending again, some may be many, but you'll be required to provide that schedule of samples invoices. Will guide you accordingly, again, when that functionality is delivered in the next 1.5 months max, so that you have. So I think that is it for me to cover. I wanted to be as thorough as possible. I might have taken slightly above an hour, but I believe I've done justice to the presentation, just addressing the different concerns and the feedback we've got from different taxpayers. At this point, I'll invite my colleagues from eTIMS to take us through quickly, maybe for 10-15 minutes max, on the some emerging issues on TIMS and eTIMS, including buyer-initiated invoicing. And of course, we'll, as I go through the common questions, probably which I may need to respond after that, then we'll do a joint Q&A. Back to you, Frederick. And I don't know, Caroline or Shuka, if you're in that, or anyone from eTIMS to pick it up from there. Thank you very much. Okay.
Thank you so much, David, for that elaborate walkthrough. So at this point, we'll have Shuka from eTIMS give us her presentation. It is expected that members would sit in, listen, and thereafter we'd have a Q&A. Thank you. Washuka, proceed.
Kindly confirm you can see my screen.
Yes, your screen is visible.
Okay. So good morning, everyone. It's a pleasure to be here with you this morning. My name is Caroline Washuka from KRA eTIMS Operations. I will just pick up from where David has left off, mainly to just give you some highlights on eTIMS implementation. This is an area that receives a lot of queries and clarification, so we thought it's important to also cover it as part of today's training. So I'm mainly going to talk about buyer-initiated invoicing and reverse invoicing as an alternative invoicing solution to just clarify in what scenarios it's applicable, so that even as you do business, you're aware. So maybe even before I start, so that I don't forget, we are also currently creating awareness. We have another implementation running, targeting fuel stations. And before we began this training, there was some, in the background, there was some, just some flyers or notifications about asking for your receipt whenever you fuel at a petrol station. That's also important for you to note that for petrol stations, they are also required to issue eTIMS invoices, because as you conduct business, you do incur the cost of fuel as a legitimate business expense. So whenever you fuel, please ensure you get your eTIMS invoice, whether it's for business or even personal use. Even for just day-to-day operations for personal use, you should also get your eTIMS invoice. So of course, if it's for business, you ensure the fuel attendant captures your PIN on the receipt, so that you can be able to utilize that receipt for purposes of claiming. So we started off the publicity campaign last week, actually on Friday last week, to run for about a month at select petrol stations across the country. So probably one near you, you'll be able to see some activity happening on the ground. Okay, so when we come to buyer-initiated invoicing, the law has provided for this as an alternative solution, and it is coming in to fill a gap, because we do have people in business who are trading with very small scale and micro suppliers. And good category are farmers or anyone who may be providing you with a service. You know, we have the Juakali sector who support our businesses and we do business with them. But the challenges around invoicing are real. And as KRA, we are working very hard to ensure that we are able to reach these groups, this category of people in business, so that we can be able to create awareness and do some general training for them on tax matters, so that even when it comes to eTIMS, they understand what role they play and why they need to also comply. So in cases where it truly is a challenge for the micro or small trader you're doing business with to issue you with an invoice, we have provided a way in which you can be able to facilitate them and raise the invoice on their behalf through now what we are referring to as buyer initiated, because you as the buyer are initiating the invoice on behalf of the small or micro seller, small or micro scale seller or farmer, be it the case. So we have the Tax Procedures Amendment Act in 2024, in December of 2024, that provided this in law, and is specifically mentioning that for a small scale trader whose annual turnover does not exceed 5 million shillings. That was deliberate because it implies that you cannot do buyer initiated invoicing for someone who is VAT registered, because you know the threshold for VAT is 5 million, or for those who register for VAT voluntarily, that is still acceptable even if you have not reached the 5 million threshold. But for the small and micro suppliers who are below this threshold, then it is possible for the buyer to raise the invoice on their behalf. So we have provided two channels through which this can be done. The main one, or the one that is freely and easily accessible, is available on eCitizen platform under the buyer initiated invoicing module. Of course, you have to activate eTIMS. You go to ecitizen.kra.go.ke, and once you've logged in, you activate eTIMS invoicing to access the buyer initiated module. The other category we have is reverse invoicing. So reverse invoicing is more of talks or leans more on integration of systems. So if you have an invoicing system in place and don't want to move away from it, having, because with buyer initiated invoicing, you would need to log into eCitizen platform. For reverse invoicing, we have the traders ERP system integrating with KRA, with eTIMS, so that the reverse invoicing is done on your own internal invoicing system. However, there are conditions to be met for you to qualify for reverse invoicing. It's not open to every category of business. It mainly targets entities that deal with numerous small-scale suppliers and people who, and these are suppliers who you have maintained, you have a way of, you have a consistent way of doing business with them, meaning that you even have contractual agreements in place. So a good example would be in agriculture sector, we have the industries who do business with thousands of farmers where they get their raw inputs. So all of these farmers have a contract with the industry or the company they provide their raw material to, or their produce. So those kinds of categories of people in that space are the ones who would qualify for reverse invoicing. But if you're dealing with a few small traders here and there, not very consistent, today you're getting supplies from person A, tomorrow from person B, then buyer initiated invoicing through eCitizen is what is recommended. I hope we've moved to the next slide. Frederick, please confirm about the 3 steps. Sometimes these slides don't move.
Yes, we have.
Yeah,
All right,
yeah.
thank you. So just to clarify, explain further on how buyer-initiated invoicing works. Like I've mentioned, it is freely accessible to all. You do not need approval from KRA to do buyer-initiated invoicing. All you do as step one, and this is a 3-step process, you just access your eCitizen profile. And you know, eCitizen is accessed by directors of the company. So a lot of queries that we get is, does it mean that the director is the one who has to keep doing the invoicing on behalf of the small traders? That is not the case. However, for first-time login, to activate this functionality on your profile, the director does need to be the one to log in. And there is a process by which they can delegate the role to a qualified or a trusted entity within the company, who can then be the one to be logging in, of course, using their own credentials, but the invoice comes out bearing the company's details. It doesn't come out in your individual details, even if you log in as using your ID on eCitizen. So it is possible for this role to be delegated to someone else. And once now you have been able to access eCitizen and gone to the buyer-initiated module, there is information that you provide there regarding the seller. So of course, for you to do buyer-initiated invoicing, you'd need to have had a conversation with that small trader you're dealing with to inform them that you wish to raise the invoice on their behalf. And of course, this is if they have been unable to. You should always give them the option to raise the invoice themselves. Because at the end of the day, even when doing buyer-initiated invoicing, the invoice still belongs to the small-scale trader. So they are the ones making the supply, they are the ones selling. So it is expected that they be the ones, the invoice still belongs to them. But we have facilitated you being able to do it on their behalf. So the information that you provide is you provide their ID number, provide their mobile number, then provide details of what they have supplied you, a description of the item or good or service, quantity, unit price, so that you get the total invoice amount. When you submit that, and this process, step 2, you have 2 ways to do it on eCitizen. There's an online form where you can provide the information for one seller at a time. Or if you have numerous suppliers, now, for example, like I was mentioning, we do have those who deal with hundreds or thousands of small-scale suppliers. We have a downloadable Excel form that you input the information and then upload as a batch. So that is also still possible. It's very important that you provide mobile number, because the mobile number is what facilitates step 3. So when you submit the information regarding the seller and the invoice, you know, the details of what you have purchased, submitting is what now triggers step 3, where the small-scale trader will receive an SMS notification informing them that an invoice has been raised on their behalf, and it gives the details of who has raised it. So for example, if it's a company X, it will say company X, not the individual who was doing the process on eCitizen. It gives company details, let's say. So company X has raised an invoice worth, let's say, 10,000. Kindly proceed to start report 2 hash to approve the invoice. So the small scale trader, that text guides them on how to go about approving the invoice. So step 3 requires approval or consent, because like we've mentioned, you're doing this process on behalf of that small trader. So they have to give their consent. And they have the option to either approve or reject the invoice. And rejecting is in case there's any discrepancy or any incorrect information, especially on amount, because that, of course, is the key thing. If the amount captured or indicated on the SMS they receive is incorrect, then they have the option to reject. You also get a notification of whether they approve or reject the invoice. You get a text notification as well. And depending on the small traders' response, if they approve, then the text you receive also comes with a link to download the invoice, You can download it via your phone or log into eCitizen profile to download the invoice. If they reject, then you have to just get in touch with them to find out what the issue was and probably redo the process. So it's as simple as that. We have quite a number of buyers who are on that platform raising invoices for their small scale traders. And data we have as at last month is over 800 million shillings worth of invoices have been raised through buyer initiated invoicing by, I think, about 1,000 buyers doing this on behalf of the small traders. So this solution is working, it's available, and in case you do need to use it, this is what we recommend. However, like I've mentioned, we always do encourage the small trader to try do the invoice themselves. If they face a challenge, then you come into it to facilitate the process. And I'll be able to show you in the next slide the solutions, the very simplified solutions we have availed to the small traders. So just touching on reverse invoicing, like I'd mentioned, it's mainly to do with integration of systems, and there is a criteria of who qualifies to do reverse invoicing. One of them, of course, being that it's limited to trusted invoicing systems. And when we talk about trusted, we mean this is an ecosystem or a platform where the different players in the supply chain are clearly defined, and that there is transparency in terms of sharing of records of transactions. So we do have supply chains that involve different parties, not just buyer and seller. We do have, especially if it's a supply chain where there's some process of manufacturing happening, we may have people like warehousemen, people who do the storage. We have transporters. We may have millers. We may have people doing some kind of processing of the raw materials. So they all are in that supply chain and all operate and are defined within the invoicing system. And whenever any transaction is initiated, the relevant parties get notification of the same. So it's transparent. Nothing happens. Nothing is opaque, rather. So I've also mentioned that reverse invoicing is suited where the buyer does business with numerous small-scale suppliers and has individual contractual agreements with them. And finally, of course, KRA does need to do a process of KYC to understand the operations of the business before we can approve you to go ahead to do the reverse invoicing. There's a process of, it's a bit of a technical process because you have to do some testing. You have to do a testing process on a sandbox environment. We provided a test environment where you come in to test and demonstrate capacity to do the reverse invoicing before you are given an approval and a go ahead to now go live with the solution on or the implementation on your invoicing system. So as I wind up, this is actually the last slide. For the small scale traders, we have come to this point where right now KRA's theme is all about simplification of tax processes, and we're also going to great lengths to be customer centric. So when we talk about simplification of tax processes, we're really talking about how taxpayers are able to comply. How do we facilitate them to comply with the requirements in law, to make the solutions available to them convenient, and to meet them at their level, meaning that we don't want taxpayers having to get inconvenienced to either acquire additional devices or incur more costs to be able to comply. So we have provided for electronic invoicing at the very minimum level, which is USSD, through *222#, where you don't even need a smartphone or access to internet. You are able to do the invoicing through *222#. And for the process I've mentioned of approval of the buyer initiated invoice, the small scale trader does it through USSD. So in actual sense, what this means, if a small scale trader is able to approve the buyer initiated invoice via USSD, then it means that they can actually raise the invoice themselves through that same platform, because that provision is there. We have also provided for eCitizen as an invoicing channel as well, for people who are at least a bit more knowledgeable with technology. It's a very simple and convenient tool to use, invoicing system to use. We have also recently deployed eTIMS Lite mobile apps, and these apps are available to both VAT registered and non-VAT registered taxpayers. These are available on Play Store and Apple Store. I think as recent as 2 weeks ago or a month ago, if I'm not wrong, they were deployed. What we are going to soon roll out, and this one will be a game changer, is WhatsApp invoicing. Of course, this through AI. We have a KRA chatbot called Shuru, a very cute character. If you've interacted with her, you just save that number. It's the KRA customer care number, 0711 099 999. If you save that number on your phone and just say hi, Shuru starts talking with you. Of course, that's how we've incorporated AI within our systems, and WhatsApp invoicing will be available through this same channel. So this will be a very convenient way for people to invoice, because at this right now, almost everyone is on WhatsApp. So we are just plugging into that existing environment. Then finally, we do have an additional solution we are currently testing, similar to, if you're familiar with eClient, the downloadable software you install on either a laptop or desktop or a tablet. We are also providing another option available through eCitizen platform as a standalone invoicing system or POS. So all these solutions are available. We've tried as much as possible to simplify them for ease of use and to facilitate compliance. So that brings me to the end of this presentation. The eTIMS Operations Office, we are based in JKUAT Towers in Nairobi along Kenyatta Avenue on 7th and 8th floor. We are reachable on email as well via teamsupport@kra.go.ke. Thank you very much.
Thank you.
Thank you. Oh, Frederick, please go. Okay.
Well, I was going to say thank you so much, Washuka, for that presentation. And maybe at this point, we'd open up the floor for questions. And maybe I'd like to start it off with a question from Eliud, who asked, for the case of manufacturers, how is the system treating the cost of sales and standard costing? I believe this might be a question to Busaule.
Yes, Frederick, that's my question. Yes, and that's why we said you realize the different accounting concepts around different sectors is why we're also coming up with that one new sheet. That new sheet we are coming up with will be able to address aspects of work in progress, aspects of having to claim certain expenses from inventory, meaning you bought maybe some goods 3 years ago or 1 year ago, but now you need to now the accounting treatment requires that now you need to go to account for the cost of the bringing them into now being part of the cost of the goods. Yes, so you may not necessarily need an invoice because the invoice was maybe for a year or two ago. It was already in inventory. You're just moving the cost maybe more from a balance sheet item to a profit and loss item. So the new sheet will address all those issues for all unique sectors, including manufacturing, telcos, and any other sector. So that new sheet we are coming up with is still the solution to allow manufacturers or any other unique sector to capture those unique cost of goods sold aspects of their businesses. Okay.
Thank you. Thank you so much. Members, feel free to utilize this chat box, and also you can unmute and raise your concern. In the meantime, we have Astelia Mumbi. Please unmute.
Okay,
Hey,
thank you for
Frederick.
the opportunity, Kepsa. Mine is in regards to a request that I wish to make. I truly wish to get mentorship on this because I registered my business last year, June. However, I find myself not having concrete information on what to do, how to file my returns, how to track my invoices. Currently, I do not have a system. So it becomes the recordings that I do them manually. So kindly, if an opportunity is there for me to gain mentorship or someone to just take me through personally, I would really, really appreciate. Thank you. Back to you, David.
Okay. Thank Australia for that. I think, Frederick, we can get contacts of Australia because the taxpayer experience team conduct a lot of trainings on new taxpayers every month on different things at a very basic level and building it up. And also, I know the eTIMS operations together with other stakeholders like taxpayer experience, also they conduct a number of trainings around different compliance initiatives within KRA. So I think Australia, you can just Australia, you can share your contacts with Frederick and the stakeholder team. They should be able to connect you with the taxpayer experience team, and where applicable, even the eTIMS operations team, where Washuka is here, and she heads the change management, so that you can be probably co-opted even in trainings, probably even which are coming next week or maybe by end of the tax is complex, so Australia will not expect you to learn everything on day one. But I think once you continue learning the different things on how to file income tax return, maybe to file TOT, how to invoice through airline portal, how to through USSD, and also those things of tracking your invoices. Maybe through the taxpayer portal, which I just showed you, that can also be one area. And also you can always be using the invoice checker if you are dealing with other persons. So I think you'll get a lot of information gradually, which can help you. And this is for any other person who may be at that point where because there is so much information though on the KRA website too. When you go to the KRA website, you just type eTIMS, maybe you type TOT, turnover tax, you type income tax, employment income, PIN, obligations, due dates. I think there's quite already good information on the website, but also I know the value a virtual and actual training on those different aspects can also add to your compliance journey. Okay, back to you, Frederick.
Thank you for the response. We have John.
Sorry, Rick also to support it. I think maybe
Caroline, you're breaking.
oh sorry. How about now?
You're fine. Your audio is fine now.
Okay. I think maybe an approach we can take, because I've seen there's also another similar chat, kind of a request on the chat box from John, asking also if they needed more training on eTIMS, how to go about it. Probably what we can request the CAPSA secretariat or organizers, if you can bring together your members who require that kind of an engagement, I think that would be very fruitful as opposed to doing it individually, and that we can do it virtually, because I think that would be convenient. So that we also invite our colleagues from taxpayer education who can do a general training on tax. And then as eTIMS, we also train you on the kind of solutions available. Like what was being said about you started a new business and still doing things manually. We would want to also demonstrate that we have provided a solution where you can be able to automate your records, be it invoicing, inventory as well. We have a system available for you to use free of charge at no cost. So I would probably recommend if KEPSA can organize their members, just put out a blast to all your members asking for anyone who's newly in business and a bit green on matters tax and compliance. We bring them all together, we organize for a forum as soon as possible, even within this month of February, if possible, and I think that would be of help. Thank you.
Thank you, Caroline. I think that's something we can organize with the Secretary, John, to have the members' names forwarded. John, I see that you had a pressing concern. Yes.
Yeah, there's this issue. Members are asking if you can get that manual that can be guiding them to comply on regards to what we call the eTIMS. Is there an available manual guideline for guidance purposes?
Sorry, I'm not following. By manual, do you mean user guides? We have a lot of information published. User guides.
Guidebook.
All right. We actually even have explainer or instructional videos on YouTube on how to access the different eTIMS solutions. If you go to the KRA YouTube channel, we have the different videos, and they are short videos that you can follow step by step, just taking you step by step on how to be able to onboard eTIMS and the different solutions that are available. And as David has mentioned, we do have information available on the website. So I would just recommend members access the official KRA platforms. That is the KRA website and YouTube KRA channel. Just go directly to those. Sometimes if you go to Google and type eTIMS, you might get information from unverified sources. So the KRA website and our YouTube channel. We also have a TV channel, KRA TV, where we host all the different training sessions we conduct. We have them recorded there, the different topics. So whichever topic one would be interested in, then that is where you can get information, even as we arrange to do a follow-up engagement. So we're in this era of technology. We also have provided a lot of our information through online platforms so that they are accessed at your convenience. Thank you.
Thank you. We had Hilary Ngeno who had their hand up.
Also, Frederick, you remember we can also maybe after one or two we go through the chat, because I think now some things have been sent to the chat.
Yes, we have Ian.
Yeah, so mine, I wanted to inquire about the withholding tax, especially when it comes to professional services like the architecture and contractors, and also for the finance consultants. Could you please elaborate the rates at which the withholding tax are supposed to be charged?
Okay. Thanks, Ian. We have a KRA runs a withholding tax regime where different transactions have different rates for residents and non-residents. The common one is the management, professional training, and consultancy. That one is at the rate of 5%, where you also fall in as an architect and the engineering and all that related stakeholders. So that one is at non-residents, unless probably we have a DTA with the respective country. But the one for contractual, that one is at 3% for residents, and of course 20% for non-residents, unless there is a DTA. But what you just need to appreciate also is these withholding taxes are not final taxes. So it is just more of the commissioner getting a small piece of the pie when the transaction is happening. But when you come to the end of the year, we'll still require you to declare the full income. The system will allow you to claim the withholding credit as a prepayment. And then, of course, now claim other expenses. And where the taxable income is still there, you pay tax now on the taxable income. So that's kind of how the withholding taxes for the common transactions you've asked about: contractual, management, professional. But we have other rates. We also have royalties. We have many other rates. But what we've done in the system is we've configured all those withholding transactions where the withholding tax is not final. Those are the ones we are requiring you to declare the gross income, and not things like interest, because all of us all interest paid to individuals, the withholding tax is final. So we may not require you to declare the gross income relating to the interest, but for the other ones, that's how you are well guided. And also, you're also expected to be invoicing, whether you're an architect, an engineer, or a contractor for all the services you offer. Okay.
Thank you, David. So we can pick one or two from the chat. We have one from Sakura International. They'd like to know how to account for the below items in reference to eTIMS or auto population. So one item 1 is Matatu bus fares. How do they also account for charitable donations, government services, that is the licenses, SGR transport, insurance premiums, and electricity tokens?
Okay. Thanks, Ian. And I know this question, I think, also has been repeated in a slightly different format, but this is the rule. This is the issue. Yes, all businesses in me are expected to issue an electronic tax invoice, whether you are VAT registered or not VAT registered. So, but we still have some businesses in the economy, like the transport sector, the government sector, transport both on Matatu, even taxi and SGR. I think they've been mentioned on that, where probably they are still not fully onboarded on issuing TIMS or eTIMS invoices. And that's why, as part of the transition, as the commissioner is pushing these non-compliant sectors, because some of them, the non-compliance is more at the sector level than individual level, the commissioner is exploring ways of dealing with these, pushing them to onboard, pushing them to comply. But on the other side, we have provided a new sheet in the return, which we mentioned. Though we are working on a new sheet which will allow you to declare these manual expenses and upload the supporting documentation. So things to do with Matatu, government permits and licenses, which probably that county government or that ministry or that regulatory authority, they are not on board yet, and SGR, they should be able to issue electronic tax invoices. I'll allow Caroline to come in on the issue of insurance premiums. They had the engagements with that sector. Maybe she can share something on that. But on electricity tokens, Kenya Power again is very open. Kenya Power said if anyone is having a business expense, they are using prepaid tokens. You reach out to Kenya Power, they issue the proper tax invoice. So again, as long as of course the meter and everything is in the name of the in the business. So again, that one already taken care of. For postpaid, that one is already invoiced correctly by Kenya Power. What you just need to ensure your records with Kenya Power are intact, including the PIN is properly mapped so that when they issue an invoice, it comes in the. And also let me add on something like telcos. We've also had engagements with telcos. Some of them have other ways of providing some of the tax invoices for some of the services you consume from them, whether it's internet, whether it is airtime, whether it is bundles and other things for the business. Again, engage the respective telco you're dealing with. They should be able to guide you on the best way of getting a proper tax invoice, especially again if the expense is material. On charitable donations, we'll wish also to ask you, have you confirmed the donations have met the strict uh, uh, provisions of the charitable donations regulations, which are already enforced? Because I think that sector has also been tightened in a bit to ensure no revenue leakages. So again, you need to ensure your donation actually has met those conditions. Otherwise, some of the acts of our businesses are more of CSR, which don't necessarily need to a donation being an expense. It's more of like you are doing CSR out of your taxable profit, not before you tax your profit. So I think separate the two. But again, the new sheet we're coming up with will still be able to take advantage of some of these unique expenses relating to the business, which an eTIMS invoice may not have been issued. That new sheet will take care of all these related concerns. Caroline, maybe on the issues of insurance, your team has been having engagements with the insurance sector. Maybe just for 30 seconds or a minute, highlight on that engagement. Okay.
Thank you, David. I think maybe there could be a clarification on the issue of insurance. Is it about the debit notes? And if insurance debit notes required to be eTIMS compliant. Maybe if a clarification can be given on that. Are you referring to the payouts of claims or
They have mentioned premiums, insurance premiums. I think they
premiums?
are
Okay.
payment of premiums.
Okay. So actually, we do have a bit of a challenge there because for insurance companies, they are not issuing eTIMS invoices for the premiums because for them, the argument is that they don't consider that to be income. But on the reverse, on the flip side, when they are paying out the claims, like if it's time now to be compensated by the insurance company, they ask the claimant to issue them with an eTIMS invoice because now they consider that payout to be an expense. Yet you, the claimant, the payout you're receiving, you don't consider that to be an income. So we've picked up that it's a bit one-sided. It's not the ideal scenario. It's something we are also discussing internally with our policy teams to align because we can't have insurance companies not issuing eTIMS invoices but demanding eTIMS invoices for claims they are paying out. So it's something that is still subject to some further discussions, further recommendations. So for now, I may not be able to give a very concrete answer on the same until those discussions now reach their conclusion.
Okay. Thanks, Caroline. I think just again to add on the existing issues which have been raised where you might probably not be issued with an electronic tax invoice. As much as, and as I mentioned in my presentation, as much as KRA is providing a new sheet which will allow you to capture some valid business expenses, but you must still have supporting documentation. And we need to have this candid conversation even about by what is it? You can no longer be paying matatu fare through cash because when the commissioner comes and tells you you've claimed matatu fares of $1 million in the income tax return, show me any evidence you have that your people. So we really need to ensure, as part of our adaptability as KEPSA members, we need to adapt to the new ways of doing business and electronic tax invoicing. You must have you must leave an audit trail of any transaction you do, especially if you're not having a valid eTIMS invoice. There has to be, you need to move towards making mobile payments using Pochi la Biashara for matatu and everything, so that when the commissioner, even if wants to admit your expense, there has to be an evidence. It can be your word of mouth against an expense of $1 million in the audited financial statements, and that the $1 million is supposed to be matatu fare used by my employees during the year. So I think we really need to, as much as you may not have a VAT, as much as you may not, it may be beyond your control to get an eTIMS invoice for all transactions, but you must leave an audit trail on how you are making the payment and having a manual invoice where applicable for all these transactions, because those are the records the commissioner will depend on when they are validating your manual expenses to consider if you've claimed the correct. So to avoid the disallowing, once you've used that sheet, the commissioner comes to disallow, ensure you've just ensured that you have that correct audit trail of all documentation, including payments and manual receipts where applicable for some of these manual business expenses, which still some of the sectors or suppliers are still not yet eTIMS compliant. Okay, back to you, Ian. We go to the next.
Thank you. So we still have from Emily. I think part of it has been answered, but this seems to have a twist. She says that she deals with many small-scale farmers, and the eCitizen USSD invoicing options have not been working last month and this month. What do we do about that? Because we have to pay them. Secondly, she asks, this year we have been given ETR receipts with our buyer PIN on it, but when we scan the QR code, some of those receipts say no details. The seller says the system has an issue, not transmitted. What happens? Does the seller need to issue new receipts, or what do we do?
Thank you. I think, Caroline, you want to handle the downtime on eCitizen on buyer-initiated invoicing and also the aspect of the invoice not transmitted and the seller is saying it's a care issue. Maybe you can handle them. Okay.
Tackle the one on buyer-initiated invoicing. What we've noted is for you, probably you have succeeded in submitting the invoice on the eCitizen platform. But where the challenge is on the side of the small trader approving the invoice. So why this may not happen successfully is we have a few reasons why. One of them being the mobile number provided by the small supplier should be one registered to their ID number. So more often than not, we find that the mobile numbers they provide are not registered in their ID, with their ID. It might be someone else's mobile number they are providing. So there is a process of validating the mobile number against the ID number, because when you dial *222#, when you're registering, because even this small scale trader is required to register on eTIMS before they can approve that invoice raised on their behalf through eCitizen. So the process of approving first requires a registration on USSD, and we normally ask you provide your ID number and date of birth so that we verify the details are correct. And of course, we also do a validation of the mobile number on which the *222# is being done. So where there's a variance, then of course that invoice cannot be approved until the correct mobile number is provided, one that matches the small trader's ID number. The other reason could be that because again, like we are saying, for buyer-initiated invoicing, you have to be in communication with these small traders to alert them, because they may receive the text, but either it gets lost lost amongst other messages, or if their inbox is full, the message will never come in. And also, if the message is beyond 30 days, because they have 30, that message remains active for a period of 30 days within which they can approve the invoice. They have 30 days from the date the invoice is submitted on eCitizen to be able to approve it. So if the 30 days lapse, then they cannot proceed to approve, and you would have to initiate the invoice again. So we encourage you to just let them know or inform them in advance. We are raising the invoices today, so that you are in the know. Just be on the lookout for the confirmation text so that you facilitate the approval. So that kind of, you cannot avoid being in communication with each other, so that this is something you're doing on behalf of someone else. So you have to be in touch to let them know of status and the progress that you are making. On the issue of eTIMS invoices having your buyer PIN captured, but when you scan the QR code, it says no details found. That basically means that invoice has not successfully transmitted. And it is not a KRA issue, because usually where we face challenges, where there is an issue with our systems, then even logging into the system is a challenge. You're not even able to raise the invoice in the first place. So if the invoice has been generated, but when you scan the QR code, you get no details found, you even get an error message of no details found, then it means that invoice has not been transmitted to KRA. Transmission is something that is dependent on the person raising the invoice, whether their connectivity is available, whether their internet connection is stable. That is usually the challenge with that kind of with that scenario. So there are cases where it's a compliance issue, because we have people who, yes, will issue an eTIMS invoice, but ensure, do their level best to make sure it never transmits. So people operating offline, and you'll find most times there are some solutions we have provided that allow you to operate offline, but so that if where you are, internet connection is a challenge, we didn't want to have it such that if your internet is not stable, you cannot access the system. You can even be able to operate offline. But what makes that invoice valid is if it is transmitted to KRA. So that really is the issue. And in cases where maybe you're not being facilitated by whoever you made the purchase from, if they're just taking you around in circles saying it's a KRA issue, then we always encourage you to reach out to us. You can give anonymous information. You can report such cases anonymously through iWhistle if you don't want it known, that you're the one reporting, because you're doing business with someone, but at the same time they're frustrating you and you don't want it linked back to you that it's you who reported them. You can do so anonymously through iWhistle.kra.go.ke, and then we can be able, if you provide us with the details of even where you made the purchase, physical location and business name, PIN, then we can be able to just reach out to them to find out what their issues are. Because sometimes it's genuine issues. It could be an issue of not knowing how to use the system very well. We can facilitate that. If it's a compliance issue, of them deliberately not transmitting invoices and putting their other taxpayers at an inconvenience, then we have measures to address with such cases. Thank you.
Thank you for that elaborate response, Oshuka. Due to the interest of time, I propose to take a couple more questions. The other admin for the chat is from David. I think this is closely related to what Irene has presented on exempt supplies. David states that I would like to know how export companies who are VAT exempt will be helped. I hope that question is clear. Or David, you can.
Yes. Yes, I think, okay, I don't know what nature of help there is, but a company which is exporting will still be treated, unless it means EPZs, because I'm not sure if export companies are exempt. What is, if you export, your goods become zero rated, and your taxable services also become zero rated, but still for your expenses within for your other business expenses, you'll be required to validate them against TIMS or eTIMS, unless they are the exemption exclusions. But on the other side, if it's an EPZ is VAT exempt, and also even EPZs have been exempted from the validations which we've just taken you guys through. Okay. Maybe because of time. Oh, we move to the next for Grace, yeah, right? Okay.
Oh, you can proceed and speak.
Okay. Now I'm saying we move to Grace now, Ian. The
For
next
Grace,
one.
I think was in regard to the informal sector, to the borders, and I think you had.
I think we've answered that.
You've been able to tackle this.
But maybe just on that, Ian, maybe just on that, it's also good for KEPSA members who are here, and I think we've at some point when you train KEPSA, we always presume the KEPSA is. I think when you do other associations, they tend to be established businesses, but I think the comment and the raised by Astelia, I think seems like you are mixed. We wish we'll have known that also as trainers, because for me, I think I had an idea of these are members who already vigogo kwa biashara, wamekaa kwa muda na they understand the basic things. But having said that, KEPSA members will also know there is an option of you having we have an obligation called turnover tax for anyone who is in business, and that business does not include being receiving management, professional, consultancy fee, or rental income. Those are exclusions. So any other person who is in business and they are earning between 1 million to 25 million per annum, actually the correct obligation which they can go there if they're having issues with getting invoices from their suppliers is turnover tax, where they'll pay a gross tax. They'll pay the tax at the rate of 1.5% of the gross turnover. They'll have to be required to file monthly. The turnover tax return is available on KRM service on the USSD, it's available in iTax, it's available in eCitizen. So again, that can also be an adaptability mechanism for such businesses who maybe due to the nature of the sector you're in, you can invoice, but probably getting invoices from your suppliers is a bit hard. Yeah, the best option could just be to switch to turnover tax and start filing monthly at the rate of 1.5% of the gross turnover, and that is final for the businesses between 1 million to 25 million per annum. Okay. Yeah.
Thank you. Next we have Purity. I think this was captured. This is in regard to small scale suppliers. For Ian, this you had expounded on earlier on, David.
Yeah.
Then we have
But maybe Ian, for the one of Purity. Washuka, do you mind just coming in and explaining the onboarding? I know USSD you can send for fewer cases, but that aspect that in eCitizen Web you can actually upload a whole listing. Maybe there's some clarity around that for the ones with many suppliers.
On buyer-initiated invoicing, that we have the option of uploading the invoice information, including the seller's details, in two ways. There's an online form where you do it one at a time, or if you have numerous small suppliers, you can download, there's a downloadable Excel template that you fill in the information as required, and then you can upload. So the upload is in batches of 500 at a time. So again, also, it's a very resource intensive process. So on your end, you need to ensure that your internet is very stable, because if there's even a little bit of outage, then the whole file will sort of hang there. So we do have cases where if you're working in a very busy office, the process of uploading is done after hours when, we don't have many people logged on to the network and the internet is more stable. So that's a consideration to have, but we do accommodate a batch upload of 500 records or invoice details, 500 supplier invoices at a time. Thank you.
Thank you for that clarification, Caroline. Allow me to keep looking at the chat. So we had from Joshua, I think he needed more training that had been addressed. If you need any personalized training, you can reach out to us through the contacts provided, team support at KRA, or you can alternatively write to us, the stakeholder engagement team, through John, so that we can organize various targeted sessions for you. Again, Joshua, his question is, can KRA provide a system for professionals, for engineers, or architects, etc., where they file after, say, 6 months because business does not come monthly, thus as opposed to monthly filing? I hope that question is clear.
Okay. Yeah. I think for professionals, you realize for professionals, and we have different types of obligations. We have some, as per the law, we have monthly obligations and we have annual obligations. So a professional, let's say like an architect or a consultant or an engineer, their monthly obligations, like for payers you earn, let's say for VAT, those ones, they have to be done monthly. And the months where you don't have business, you file a nil return. So that is properly allowed for the monthly obligation, so that if you're having business which is up and down, you declare the month where you have transactions. Other months you can file a nil return, depending on the but when it comes to the income tax return, then this is an annual return, because even for professionals and engineers, we don't expect them to be on turnover tax, because one of the exceptions of turnover tax is anyone receiving management professional training fees, which is subject to withholding tax, and of course, people receiving rental income. So again, you realize then they cannot be on turnover tax. So for income tax purposes, it's an annual return. For the monthly returns, you need to file them, whether it's VAT or payee. when you have transactions. The month you don't have transactions, you file a nil return. I think that's the best advice we can provide to Joshua for now. Okay.
Thank you for the response, David. Next, we have a concern from Kimani. What should I do if my PIN number is used by a supplier erroneously and it is not reversed via a credit?
Yeah, ideally, if someone uses your PIN and you have officially reached out to them, the thing I expect them to do is to issue a credit note. And that should be the best way to go about it. So I think if they're having challenges with getting a credit note from that supplier, probably they can reach out to you. We probably see if we can, the relevant teams within KRA, even if it's eTIMS, we or any other person can pick it up and just reach out to the supplier. Maybe the supplier doesn't know how to issue a credit note or they're having other challenges, so that we just let them know that the only way you get this invoice out of Frederick is when you issue a credit note so that KRA does not expect Frederick, who allegedly has bought something from David, to be now also declaring those transactions going forward. So I think, yeah, we can escalate through your KEPSA, Ian, and team, and we pick it up from there. Even if it's a stray one, we will be able to locate them because KRA has access to the databases of all pins. So I think someone has come and commented. It doesn't matter whether you know them directly or not, but yeah, KRA can help you link up to the supplier. Okay.
Thank you. We have from Hillary. This is a concern. What can I do when some of the suppliers fear generating eTIMS invoices and reject? What can Hillary do?
Okay, I'll give you from a dissent, but I think what what Washuka has just taken us through is also an option to that. If they fear generating eTIMS invoices, then you need to prep them and let them know, I'm in business. I require this invoice to claim my business expenses. So it's either you're issuing me with an invoice or I'll initiate the buyer-initiated invoicing, and you must accept the consent. Now, some of these things, it is good as businesses, you need to tie some of these controls with the payment process. It is hard to push someone to give you an invoice before you make an actual payment. So again, the collaboration, partnership, and alignment between procurement, supply chain, finance, accounting, and everyone has to be top-notch going forward on what documents are we relying on when you are dealing with the supplier. So on one side, yes, you can reach out to the supplier, tell them there is buy initiated, accept, but tie all these things to the payment process, then you'll be a better person going forward. But again, Hillary, if the supplier has already issued you, let's say, with a manual invoice, or you already paid maybe due to one reason or another, and now the invoice is not coming, yes, you can share those supplier details with us, and the respective teams will be glad to make the supplier compliant, because I think now we are in the business of helping you do your business correctly. And if there is a supplier who is not compliant, we'll be glad to make them compliant on your behalf. Okay.
Thank you. Thank you. I believe now Hillary knows what to do. And next we have from Irene. This may have been partly answered earlier. Irene asks, how will expenses be validated in cases where one deals with 100% exempt supplies or sales?
Oh, okay. Please note, the validation we are doing in the income tax return is not for VAT registered taxpayers. The validation is for income, meaning whether your income is from zero-rated sales, exempt sales, generated sales, it doesn't matter on the side of income tax. We are validating your actual invoices. So whether you are dealing with exempt, zero, or taxable at 16, you ought to have registered on TIMS or eTIMS where applicable, and you ought to be issuing invoices. And that is still the same parameter we'll use to validate your income on the other side, in addition to the gross amount as per your withholding. So just let's separate the exempt, zero, and generated is more important on the VAT side, on the income tax side, we just look at it as income and we have to validate. So you ought to have been issuing invoices for all those transactions, whether VAT is 0 or exempt, if you are VAT registered. And even if you're not VAT registered, you ought to have registered on eTIMS and be issuing non-VAT eTIMS invoices. Okay, can go to the next.
Thank you, Irene. I hope that response is satisfactory. We go to Duncan. He raises the question: in case of eTIMS system error where it generated a system generated invoice, what is the way forward? I believe there has been a response. Partly, Caroline might have covered this during the eTIMS downtime. But also on the chat, one of our colleagues did reach out and respond that for any erroneous invoices, you can cancel the invoice through a credit note.
Okay,
So now
I think that's fine.
yes, we go to Jackson. Jackson, this is in regard to dealing with small scale farmers. This has been addressed. Gladys, this is dealing with expenses on SGR tickets, bus fare, electricity. This, I believe, has been addressed. We go to Grace. She asks, once we acquire fuel receipts, will fuel be retreated as an expense or a purchase considering it has VAT and claimed together with other VAT claims, but also I didn't see it in the list of allowed expenses.
Oh, okay. I think that's relating to the ongoing campaign on EL, the eTIMS fuel station system, which we are encouraging all of you who are fueling. Please ask for a receipt. Let's have that vibe going on to ensure that the petroleum sector is also compliant. But once you've been issued with an invoice for fuel, you realize just because you've been issued with an eTIMS invoice does not necessarily mean that the invoice is fully claimable both for VAT and income tax. VAT might prohibit certain expenses, so meaning when you download your sheet F of the VAT return, you'll have to remove that specific invoice fully or don't claim it totally, or you may need to apportion it depending on whether the invoice was incurred for both taxable and exempt supplies. So again, the VAT return has those provisions. When it comes to income tax, as long as the fuel was used to generate taxable income, then it becomes a business expense, and the fuel eTIMS receipt will form part of the pool of expenses or purchases which the system is going to avail to you when you are filing the return to be validated against the purchases you are claiming in the return. So for IT, it forms part of the expense as long as it was fully claimed, fully incurred to generate taxable. So we do, and please note in the list of allowed expenses, we have only indicated exempt expenses where you don't need an eTIMS invoice. Otherwise, once in the P&L, we are not capturing the list of allowed expenses. What we are capturing is we've captured the list of exemptions or exclusions from eTIMS invoicing. Basically, all the other expenses, when you claim them in the return and they were incurred for a business purpose, then you must support them by an electronic tax invoice. So I think that's the response to. And I think for Nicholas, the same thing on professional subscriptions is the same thing. The new sheet we are going to provide for manual eTIMS or TIMS expenses will allow you to declare your professional subscription details, including the PIN, the name, and the receipt number and the mode of payment you did to your professional body. So there will be some details to declare, which will also help KRA reach out back to some of your professional bodies who are not compliant and they need to be compliant going forward. So we hope the issue of professional bodies, we expect a quick turnaround in the course of this year. And I think Frederick, are you in? Please just
Yes.
remind me. We pick it up this because I know your team maintains we have those arrangements with some bodies where we have these stakeholder frameworks. I think we need to ensure all those ones we have frameworks, they are issuing eTIMS invoices. I think we also need to start not just organize training for their members, but also we need to ask the professional bodies, the LSKs, the ISPACs, and everyone we support, including KEPSA. I'm not saying KEPSA doesn't issue, but I think we just need to look at all of them and reach out to them on a specific issue of they need to onboard on eTIMS and issue eTIMS invoices for their subscriptions because it's a concern which comes from all our stakeholder engagement since November. Okay. Walter, are insurance debit notes required to be eTIMS compliant? Caro, I believe that is what you answered. These ones, they should, but I think, of course, you explained the other engagements you had with the insurance sector. Caro, I think that was okay. Then, because the insurance sector is not exempt, so I think we can give the eTIMS operations team some time to finish the conversation with them and see how best we turn them around. Let's go to Catherine. He says she does livestock rearing. How can we go about eTIMS? You know, eTIMS is for you as a business person to issue an invoice when you are selling or offering a good or a service, which is liable to be supported by an electronic tax invoice. So, of course, now for livestock rearing, two things I'll give you, Catherine. I also do some side hustle for farming. I can tell you for go to TOT. Either move your farming business to a company on board on TOT and on the company, continue filing, or add a TOT obligation to your individual PIN, which I may not advise. Probably may be better you just get a separate company to handle rearing, farming, completely detach it from your individual PIN. But if you don't mind, add a TOT obligation to your PIN. Start declaring your farming income under TOT, especially if it's between 1 million and let's say it's below 25 million per annum. Because on farming, also farming is a very hard, it's also a very hard, it's for some lack of a better word, it has a slight non-eTIMS compliance, meaning where you go buy your feeds from the retail agro, from the local agro vets and other things, the vets who come to treat your cows, the other things you buy in the farming. Yes, when you supply that milk probably to Brookside or you sell your bulls to wherever, yeah, that one you can issue an invoice if you wish. But you realize most of your expenses probably may be from informal people who most of them you may not get. So again, try get the same practice is demand for the invoices where you can. If not, move your business, your farming business to turnover. It will give you a lot of relief going forward. Okay. The next one quickly because of time, we need to wrap it up. We're supposed to close at 12. Please advise how to claim for fuel bills for company saloon cars where the supplier is read an item invoice with VAT, but we haven't claimed the VAT as it's a saloon car. But how do we claim the VAT not claimed as an allowable expense for income tax? I'm not sure if that's an allowable expense, the VAT on a prohibited for, because on that side, that whole transaction was prohibited. But anyway, that probably can also be a legal interpretation issue. But again, the new additional sheet to claim will take care of some of these, because your scenario is unique. So it will take care of any unique scenario as long as you support it with supporting documentation. But I may be glad you seek probably legal interpretation from KRA if VAT on the prohibited input tax, because on the other side you are claiming it in full. You are claiming the invoice of whether you fuel or you repaired a saloon car. The VAT Act says those are prohibited, meaning you don't claim them. But when it comes to the income tax side, the full expense is available for you. So I'm not sure why you still want to include the VAT of something else when on the income tax side, the full expense of fuel and repairs is available for you to claim. Yeah. Okay. Esther, quickly, some small businesses traders appear not to be familiar with the citizen onboarding or rather where to start to be compliant. In summary, where should the small trader begin if they wanted to issue eTIMS compliant invoices today? Training is an option, but that will take some time organizing. So I'm just wondering what is the fastest option for today compliance. I think two things, but I may want Caroline to come in. Two things: you implement by initiated invoicing, or you train them on issuing invoices through SSD. But Carol, Awashuka come in and address the aspect, the concern of Esther Mucheti, that some small business traders appear not familiar with the citizen, and she where to start. Of course, training is an option, but she wants a much faster way of turning them around for today's compliance. Okay. Oh, but sorry, the response has actually been issued already. One can either reach out, Mercyline has responded. One can either reach out to us, visit any career office or refer to you YouTube videos, okay? But also I think buyer initiated invoicing is an option for this person to address the concern of Esther. And also you can train them on the USSD. It is very straightforward, by the way. All the members in this call, you can go to *222#, go to option 5, go to sales invoice. It's a very straightforward by the process of issuing an invoice on USSD. If you want to help the small trader invoice themselves, you can take them through that training, or you can tell them, I'm going to initiate the invoice. A consent will be sent to your mobile, to you as an SMS. You'll have to log into SSD or the Citizen Web to accept the consent, and you move on. Maybe, I don't know if there is any further clarification by eTIMS, but you can come probably and are we able to have visibility of the list of eTIMS invoices received from our suppliers in iTax? I think when I started the training, I said you can request for the schedule of all this visibility. For now, we are working on enhancing the dashboard, but in the meantime, please request for the schedule from your respective account manager for all your annual sales invoices, purchase invoices, and even import records where applicable. Nancy, how come when one generates an eTIMS figure, the system allows the invoice to be generated even if the PIN number is incomplete or wrong? uh, Maybe we bring in, of course, PIN is not mandatory. And also, maybe let me just explain. PIN is not mandatory. And you should also know that, Nancy, when you are dealing with an offline eTIMS solution, when you are offline, there is no validating of PIN. But I believe probably you can't do this when you are using online portal because the PIN is validated on the fly. So again, that's just aspect of offline. So that is the reason why you can capture an erroneous PIN if you're using an offline device, but the PIN will now be validated when it is transmitted, and now that cell might move from a B2B cell to a B2C because the PIN might be dropped off from the invoice detail because it is invalid. Wesley, please advise on where we have a supplier who raised an invoice in USD, they transmitted in USD. Hence, we cannot claim as the invoice under transmitted. We tried in getting the supplier, but the team has since lapsed for them to raise a credit note. How can this be resolved? Wesley, the solution you have for your supplier is for them to reissue you with the correct invoice. Them issuing you the correct invoice has little to do with them having to do a credit note because it is your supplier. You bought something for $1,000. Instead of them doing $1,000 by 130 and issue an invoice of 130,000, they issued an invoice with $1,000. Of course, they need to reissue the correct invoice of 130,000 Kenya shillings. Then they pass a credit note of the 1,000 USD invoice they issued. And of course, the credit note helps them. It doesn't necessarily help you, the buyer, but it helps the supplier to reduce the. So I think the advice is let them issue with you the correct invoice of the translated amount, and whether they have challenges getting a credit note or not, that is probably now not a concern of the buyer. That issue now they pick it up with us as a KRA. Okay. In terms of small scale farmers, what will you advise since most of the products are zero rated? Should they go for turnover tax? I think I've mentioned that. We highly encourage guys who are between 1 million to 25 million. Please on board on turnover tax. Start filing monthly. Pay 1.5% of your gross turnover, which is final. It reduces the headache of which suppliers are not giving you invoices, which matatu fare. Yes, it is something you can onboard as a small scale trader, farmer, or business. Hi, the guys on turnover tax. Someone is asking, uh, uh, guys on turnover tax, when will they get auto-populated returns downloaded on iTax? We are working on that, Jess. We'll try see how well we can onboard the pre-population of turnover tax returns based on your invoices. And I think that is something we've picked it up for future delivery. Nancy is asking when an eating invoice has been generated. Oh, I think she has been mentioned. The question of Nancy has been answered by Mercy, but let's just read. When an eTIMS invoice has been generated successfully, when one downloads, how come it does not download? You can only see the image of the invoice on top of the indicated download, but when you click is when it's downloaded. Are we supposed to download it from? I think you've been guided to log in where you are able to view your invoices accordingly. So I think we can go with that. From manufacturer's point of view, is there a way KRA can come up with withholding tax, especially with regards to small farm holders, that is final tax, where the farmer will not be required to generate eTIMS invoice as long as the withholding tax is paid? Yeah, Jackson, that was one of the provisions in the what is this proposal? The medium tax MTR, is it MTRS, medium tax something, is it MTRS? I've forgotten the MTRS in full, but that framework for the government, that was one of the proposals for hard to tax sectors that KRA was looking at, having a blanket presumptive tax rate, the farmers, the borders and the likes, where they can pay a certain flat rate, and of course it is final. But for now, they have to invoice, or you have to initiate the invoicing through buyer initiated invoicing, as Washuka had guided, and of course now you get the invoice and they declare the income. Okay. What does one do when one receives an iTax receipt that does not show on the automated iTax VAT download? If it's a supplier, you reach out to the supplier and you ensure that they transmit their invoice. Or if it's an import, you liaise with the customs, you liaise with your clearing agent to ensure the custom entries are properly cleared in the customs business system. So I think if something does not populate on the side of the purchases, engage your supplier. If something does not populate on the side of sales, connect your device to the network or take another corrective action to ensure your device is transmitting the correct details to the VAT download. Kindly explain what will upload if you use public transport. You'll upload you'll upload the messages you've paid to Pochi la Biashara and other things. So it doesn't matter if it's the same employee or not. What we are trying to say is you can no longer be incurring business expenses with no evidence. I think also that one, even in the era of non-eTIMS, it is probably not acceptable. So all business expenses must have an audit trail. The transport sector has really onboarded the aspect of mobile payments. So I don't think we should have a problem with mobile payments on public transport. All the matatus, however old they are, have ever pandered, they have had Pochi la Biashara. There's always a number you can send. That is the business adaptability mechanism. Yes, we want all businesses to adopt. Okay, how does one do when you have a credit note that is not being accepted by the iTax system? Well, it is gotten from the auto-generated iTax. I think some of these are queries you can probably engage your account manager, they can guide you. But for a credit note, just note, if you need to know how the credit note has come. You cannot claim a credit note if the corresponding invoice was not declared on a line item. I think just probably that is just where you are going wrong. A credit note can only be claimed on a line item if the original invoice had already been claimed on a line item, either in the same return or probably in a previous return. Otherwise, make your credit note adjustments on the lump sum sales going forward. Is special table still being considered? Penalties for nil filers? Yes, we are still running the VAT special table, putting anyone there who is not compliant as per the parameters set by the commissioner. And also when your customers are coming to file the income tax return, if you are in the special table, they will not be able to claim those expenses on the income tax side from anyone who is the special table. How to deal with penalties? The guidelines are provided. You will file. The penalties will be administratively taken care of by the commissioner. The guidelines are very clear on the aspect of the special table. Membership fees, I think we've already captured that. Are there any standard rates on late payments? Yes, payments attract a 5% late payment penalty for most obligations, but for payee, in addition to the 5% late payment penalty, payee also attracts a 25% late payment penalty in addition to the 5%. The process sounds so complex. Why not make it simple to enable people to comply? This looks bureaucratic. Yeah, the process will always be made better, but for the ones who have already been filing, you can realize the only thing which is changing is the validation of expenses. These are wild one. Can you let me know if service charges for commercial bidding are chargeable to income tax and also VAT? These are the service charges paid by owners for maintenance of common areas. Of course, service charge, I've seen landlords adding service charge and rent and charging VAT. So they should be liable to VAT. On the income tax side, yes, it's a valid expense on the income tax side, but most landlords have organized different groupings or holding companies to manage receiving the service charge. And if it is being used to improve the property, then of course there is no tax implication on the income tax side. But you can, James, you can engage your account manager also further for that. If you raise an invoice and the person paying you is trying to evade paying this and is requesting off the books payment, yet he has a PIN, the invoice is delayed by say 4 months, sum involved is 50 million. Can KRA help in complying? Oh yes, Joshua, we are glad to help you to help your supplier dealing with 50 million, Mike. 50 million rather. Hey, yo, we are ready to comply. Even today, let us which supplier needs our help to turn them around immediately. Are you able to generate a credit note now for sales invoice dated January 2025? Yes, you can generate a credit note for a sales invoice generated January 2025. But of course, for VAT purposes, you cannot claim it because it's time barred. But for income tax, that credit note can be adjusted against your 2025 sales. Okay. In case of eTIMS system error where generated a system, I think that one you've already answered. Thank you, Lan. Thank you, Mercyline, for answering. I think we've come to the end. Maybe we really need to bring it to an end. We're almost 1 hour past the time. So I think maybe Frederick and back to you. I think, and maybe Washuka, do you have any closing remarks? Then we can take it back to Frederick and Ian to wind up because really time is not on our end. Okay.
Thank you so much, David. For me, I just want to appreciate members, KEPSA members, for making this session so engaging. We really do appreciate your feedback and even the clarifications you're seeking inform us on how to do things better. So we will be publishing some FAQs around the process of income validation of income and expenses. As we collate all your feedback, we see what are the common queries that keep coming up. So it's also helping us build on the FAQs and some user guides on how to file this return. So once again, just to appreciate you all, and we'll wait to get some feedback from John on when maybe we can have the next forum for those who are a bit green and just need a bit more support from KRA on tax matters. Thank you, and I wish you all a good afternoon. Back to you, David.
Okay, Frederick and Ian, I think have been our co-hosts from both KEPSA and KRA. Maybe Frederick, you can coordinate the next processes. But for me, I'm so grateful for everyone who's joined. Till we meet again, God bless. Please take advantage of all the information available on our website, on the KRA YouTube channel. There are so many trainings we've done on payee, on VAT, on eTIMS, on turnover tax, on everything you can easily get to make your compliance journey easier. And for us from the technology side, we aspire to make your tax filing process much simpler, more user-centric, more customer-centric, and more user-friendly, even as we give you more options on how to file, how to pay, how to interact with KRA. So we take your feedback very seriously.